So the easy money's been made just because you were sitting on them and they popped up. But the big money is still ahead.
Welcome to Thoughtful Money. I'm its founder and your host, Adam Taggart. When the precious metals enter into a bull market, the shares of the companies that mine them usually outperform the price gains of gold and silver themselves, sometimes wildly. Well, a precious metals bull market is currently underway, and the mining shares are indeed starting to come to life. How much farther do they likely have to run? And when investing in precious metals mining companies, what should investors look for? For answers, we've got the good fortune to welcome analyst Jeff Clark back to the program. Jeff's the publisher of the Gold Advisor family of mining stock newsletters and author of the book Paydirt, Mining for Profits with Gold and Silver Stocks. Jeff, thanks so much for joining us today.
Oh, it's great to be back with you, Adam. Thanks for that nice intro.
Yeah, well, look, I mean, the intro is just spouting facts here, nothing but the facts. And Jeff, it was fun to get a chance to see you briefly in person
Yeah.
at Rick Rule's annual symposium in Florida the other week. We're now back home in California where it's much drier and cooler. So nice to be out of all that humidity. But look, nice to talk to you about the bullseye of your area of expertise, which is precious metals mining stocks. As I mentioned there in the intro, they actually finally are starting to come back to life after a very long winter. I'm one of those long-suffering precious metals mining stock owners. So I'd love to talk to you about the opportunity that you see ahead, the degree of opportunity that you see ahead for that sector. Real quick though, before we get to the stocks themselves, what's your current assessment of the precious metals complex right now? What's driving it and what inning are we in? Just talking about the metals themselves.
Well, that's a great way to start, Adam, because we are in a bull market. There's no doubt about that. It started back, in my opinion, on leap year day last year, because the day before the Fed came out and said, well, we're going to raise rates more often and more frequently than we said. That since changed, of course, but gold ignited the next day and essentially, Adam has never looked back. It's never had more than a 6% correction since then. So gold's in a bull market, I think, as most everyone knows, but we have confirmation of the bull market because the miners are outperforming gold itself. And as proof of that, gold is up 64% as you and I talk since the bull market started back in February of 2024. But GDX is up 103% since then, and GDXJ is up 111% since then. So you have GDXJ outperforming GDX and GDX outperforming gold. Those are the very ingredients that you want to see in a bull market. And so we have confirmation of that. So and by the way, this all started before Trump was elected. It started before the tariff thing. I think gold was driven in part by the tariffs and the uncertainty around that. But and I think that explains why gold's currently correcting a little bit because the tariffs seemingly are getting resolved. But that's not the only reason. And there's so many other risks and vulnerabilities out there that I think we've got years to run, frankly, in the bull market. Most of these last 3 to 4 years at a time, and we're only beginning year two here. So,
Okay, so you just answered my question there about, or at least you spoke to the spirit of my question about how much further does this bull market and the miners have to run? Sounds like you think could be a number of years, or at least a couple of years from here. Um,
yeah, it's going to be a couple years, and there's some chartists out there. Adam, sorry to interrupt you, but there's some chartists out there that are saying this is going to be more like a 10-year thing because of the breakout. And think about this: silver hasn't even broken out yet. It's up, but if it goes back to 50, you have a cup and handle there. And when that breaks out of 50, I mean, look out, that thing's going to really run, and the silver equities are just going to scream.
Okay, so let's actually get right to the meat of it here then. Okay, so I was going to ask you about sort of where you thought the metals themselves may go. So uh, Gold, do you think is correcting, maybe consolidating here? Again, it's had a big run. Silver, while it's doing well, you don't even think it's actually an official breakout territory yet. So that won't happen until we get around 50, it sounds like you think. With GDX, GDXJ up, what was it? Are they both up over 100%? Um,
Yeah, GDX is up 103% as you and I talk. GDXJ is up 111%. Again, I'm measuring from when I believe the bull market started, which when you look at a chart, is pretty obvious.
Pretty obvious. Okay. So I guess the question is that a lot of people are asking, especially if they haven't bought into this sector yet, is, well, have the big gains already been made? So Jeff, even if this continues for a couple of years, have we seen the majority of the price gains so far, or are we still in
Um,
early innings on the price as well?
we're still in early earnings. Doug Casey, Rick Rule, and others have claimed, when this bull market starts like this and you see a good spurt in the miners, a lot of doubled and tripled year to date. That's the easy money. So the easy money's been made just because you were sitting on them and they popped up. But the big money is still ahead. That's a common phrase in the industry, and I believe that definitely applies here. I frankly am looking forward to some very big gains. There'll be a lot of new financings starting again in the fall. That's been a positive indicator for the industry as well, by the way, just how much money these companies have been able to raise. The one that raised 1 million a year ago is now able to raise 5 million. So you have some very good indications of the strength of this bull market.
Okay, great. So we're setting the table here. You just got everybody's attention, which is you haven't missed the big run here yet. The big money still lies ahead. To the fact that gold is up 64% since leap year day last year, um, which, folks, if you don't know what leap year day is, we're talking about February 29th because it was a leap year, the
Yeah.
extra day in that leap year. Um, uh, uh, you know, you talked about how, okay, so coming into 2025, yes, the uncertainty around the trade deals and the tariffs and stuff like that, that helped contribute to supporting gold price. I'm sure to a certain extent, so did um, the Israel-Iran tensions, things like that. But a lot of that stuff is now becoming less certain, right? To your point, you said earlier, we're trade deals are getting struck. We're getting a better sense of what the tariffs are going to be. We haven't seen a lot of inflationary impacts yet from the tariffs, some, but not nearly as much as folks were fearing early on.
Yeah.
And that might explain why gold, to your point, is correcting or more or less sort of traveling sideways. It's still above 3,300 now. It's the day we're talking here, Jeff. Um, but you're saying, hey, look, the sort of fundamental breakout for gold started a lot earlier. So what are the fundamental reasons that are driving gold? Because they're clearly not just the tariffs or the relatively brief skirmish between Israel and Iran. It's other things. Is it fears about deficit spending and the purchasing power of the currency? Is it something else? Is it just supply and demand that we've got a bunch of central banks that are now buying gold in a way they weren't before? What's really fundamentally going on here?
Well, all the above, but what you have is rotating chairs, right? It started because of what the Fed was saying, and then we morphed into inflation. Then we morphed into Trump, then we morphed into geopolitics, war, what's going to be the next catalyst that makes headlines? Is it the debt and deficits? Is it the money printing machine? Is it the Fed actually lowering interest rates? Is it a black swan? Adam, I should mention, I went back and looked at all the crises over the last 50 years, and almost half of them literally were black swans. In other words, they weren't predicted,
Right.
or maybe even expected, COVID being a good example. Um, and so you have to be long gold, in my opinion, until the monetary system is reset and more stable and more honest. We don't have that, and so we're going to remain long gold for the duration until that takes place. But I think there's a lot of, as I said, risks and vulnerabilities in all the systems out there. Recession, the stock market, the list goes on. We don't have a stable system right now in place that would tell us, hey, you don't need to own as much gold now or any gold right now. We don't have that.
Okay, so we don't have a stable system, but we certainly don't have anybody in power talking about a monetary reset at this point in time, right? I mean, I guess the closest is we've heard of this BRICS countries might create a trade currency that'll be gold backed. But I mean, it's not like we've got the US saying, oh, we're going to revert back to, or we're going to change the fiat system that we're on. We're not hearing that from the other major world centers too. The point
No,
being
and
is
I'm not
it's
saying
going to be
that's
a long
imminent.
wait.
Yeah, and again, I don't. I'm not saying that that's the next catalyst or anything like that. I'm saying that's the core reason of why we own gold and why I'm going to remain long gold until that takes place. It probably won't be the U.S. saying, "Okay, we're going to make a change." It'll probably be something that's forced on them, some kind
Right.
of monetary, financial, global event that triggers that. I'm not really worried about that. I just want to make sure I'm prepared for it because I do think at some point it'll happen. But even if it's not my lifetime, that's okay. I think I'm gonna make a lot of money in gold stocks. So that's why I'm here.
Well, and that's why I wanted to score that, which is unless and until that happens, in your logic, the monetary reset, there's going to be compelling reasons to own gold. There's no indication that anytime soon there's going to be a voluntary currency reset. So it's probably going to be a long tailwind at your back. And even if it's not, even if it gets forced on the system because of some big black swan crisis that nobody saw coming, you're going to want to own gold going into that crisis, right? So to your point,
Oh
it's like,
yeah.
yeah.
Yeah. And by the way, I'm a dollar milkshake believer. You've interviewed Brent Johnson before and
Mhm.
what he says, he studies that. That's his expertise. I follow that. I believe that's what it's going to be. It's not because of the dollar crashing. It's actually going to be because the dollar gets so strong that it impacts other economies and that forces some kind of monetary fiat reset. But be that as it may, you don't have to agree with that. I'm just saying it could be any number of things. And until that takes place, you have to be long gold.
Okay. And just to be super clear, when you're talking about that dollar milkshake theory, when you say the dollar getting stronger, it's the dollar getting stronger versus other fiat currencies, not
Right.
necessarily and probably not versus gold. Yeah.
Right. Right.
Yeah. Yeah.
Thank you for clarifying.
No, 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 no worries. And let me just also note too that the current strength in gold that we've seen, over the past year has been happening at a period of time where the Fed has been not cutting rates, right, and
Right.
engaged in QT. So, I guess I'll just ask you this question. What do you think gold will do if and when the Fed eventually says, okay, you know what, we're going to start cutting rates now?
Well, gold has traditionally, historically risen in rate cutting cycles. You can document this. I have documented that. Gold rises in rate cutting cycles, doesn't do as well in rate rising cycles. So, I mean, that's another potential catalyst for gold, some of which would take place, by the way, if maybe before the rate cut is even announced, but when there's, some kind of announcement, we're going to cut rates, or there's a rumor of
Right.
them
The buy the
imminent.
rumor, sell the news. Yeah.
Yeah, yeah. So that's traditionally been positive. A recession has been positive for gold. Gold rises more often than it falls during a recession. It's risen in all recessions except two, and those two were a decline by single digits. It's also risen during stock market crashes. So, I mean, I'm getting a little off topic from your question, but uh, my point is there's a lot of things out there that gold can address and hedge for your portfolio.
Okay. So if folks are watching this video and they agree with your logic, Jeff, or they've got their own logic that suggests that the precious metals will continue to have, at least several good years ahead of them from here, then obviously, you can play that by owning the metal itself. But if you are inclined to say, look, this is a trend I really want to take advantage of, then owning the miners essentially gives you what's called leverage to the price of the precious metals. So the
Hmm.
precious metals go up by a certain amount. Miners will go up by some multiple of that in general. Obviously, it depends on the mining company itself, but even just the beta of that sector is usually a couple multiples of what the underlying metal itself does. So that's the world you live in, Jeff, which is to say, okay, look, I want to help investors really ride this wave. Now, uh, there's a lot of chaff out there along with the wheat in this sector. It's kind of notorious for it. I'm not telling you anything you don't know. So having a guide, somebody like yourself, Jeff, who, you know, is a seasoned mining analyst, knows how to analyze these companies from a financial statement standpoint, but also from a geological results standpoint, who's gone out and toured mines, who has relationships with the talent in this industry, the CEOs, the executives, the geologists, et cetera. The role that you play is, okay, of the thousands of mining companies that
Yeah.
are out there, what's the wheat? What's the really good stuff that has a much higher probability of actually doing well and providing a really good return when the market conditions are right? So you've been doing this for a long time. So I guess first question is given the opportunity set you see ahead of us right now, how does that compare to other points in time in your investing career? Like, is this feeling
Ah.
like one of the best areas of opportunities, like a fair to middling one? It's going to be a disappointing bull market versus some of the biggest ones of the past. Do you have a general gut sense?
Um, well, if you remember during the great financial crisis, we're in the middle of a bull market in gold. We had the big crash, included gold, and then we came out of that. From that period, Adam, 2008 to 2011, there were 141 10 baggers or more.
Wow.
141 in that 3 year is actually only 2.5 years. 141 of them. Now you're not going to get all those, but what if you got 10% of them? What if you got 5% of them? I mean, how would you feel if 3 years from now your portfolio had five 10 baggers or more in your portfolio? I think we'd all be pretty happy with that. I think that's the kind of potential we're looking at. But that's one bull market. Then you had the 1970s, and then you have we had a little one in 2020. I did very well in 2020 because I bought the crash. I love big dips, and I cannot lie. That's exactly how I played it. And I did well. And since then, and you and I've talked many times since then, until recently, it was a struggle. It was dead. Well, we're now back at a period in time where it's ignited again. As I've showed before, we're in a bull market that's confirmed. And so any major correction, meaning 6, 10, 12%, anything in that range is a buying opportunity, in my opinion, until this thing ends. And we're not anywhere near that. So I think, 2 to 3 years from now is something that we're all going to be very happy in. But I would compare it to those other periods I mentioned because of the opportunity that is ahead of us based on what history says and the fact that we're just getting started in this one. And we have confirmation from most of the industry that this is going to be a very healthy bull market.
Okay, so when you're investing an emerging bull market like this, or early on in a bull market like this, um, I guess first you see the metal prices rise, and then you do your forecasting and say, okay, well, if these prices hold, and if the cost structure of the mine stays roughly the same, profits should increase by X, right? And the real savvy guys do that math early and get into these companies when the prices are still pretty low. Wall Street in general has overlooked this sector for a long,
Yes.
long time. It really kind of, I mean, Wall Street doesn't like the precious metals in general. Um, and this is quite a small sector. So it's not a sector that a lot of capital spends a lot of time in. A lot of big Wall Street capital spends a lot of time in. Um, and it's been interesting that even as well as gold has done, we really haven't seen that much buying interest in just the Western investor in the metals themselves, right? So I'm kind of leading up to the question of what's it going to take or what does it take for the sector to start attracting real capital to get the party started? Is it the phase we're entering into right now where the companies are now, the metals have been high enough for long enough that we're now actually seeing their profits and their profit margins really begin to blow out? And is that what catches Wall Street's attention?
Yes, in part, when they see the green on the screen right now from our little sector, they're going to be very attracted to that. It's hard to ignore. Year over year, the earnings and free cash flow of the top producers in the world are up by double and triple digit percentages. So there's a lot of green on the screen right now. I think that inevitably attracts them. What I think the big catalyst, though, Adam, is when the general markets where those guys like to play becomes weak or crashes or goes into a bull market or whatever the case might be. When they're not making money over here, I believe they'll come over to try to make money here with us. If you look at the ratio between the gold miners and even gold relative to the S&P, the Nasdaq, the Dow, gold has barely risen, believe it or not, relative to the Nasdaq, relative to the S&P 500. It's quite amazing. It's still near lows. So that breakout is going to occur not just when the gold price rises, but when other stocks, other common stocks, the major indexes, when they go weak. That's when that ratio will start to move higher. And I believe that's when the mainstream and Wall Street players will move in.
Okay. So obviously, past couple of years, Wall Street money has chased the Magnificent Seven, right? We've had one of the most concentrated, you know, markets, stock markets in
Yeah.
history. And that trade is still working right now.
Mhm.
But if and as that trade starts to cool, you're going to expect to see capital rotation, begin to say, hey, look, we had a great run there, but it's looking like it's petering out. What else looks like it's kind of, got some sizzle to it? Oh gosh, look at the green over here in this little mining sector. Let's go there.
Yes.
Yeah. So,
To be
okay.
blunt about it, yes.
So in your answer then, on a relative basis, it might say, okay, I think we're going to have a better time there. Let's move. But on a relative basis, uh, the market cap of the precious metals stock sector is tiny compared to even just the Magnificent Seven, right? We, at the I don't know if it was one of your slides or not. It might have been Adrian Day's, but at the symposium that we were at, I think it was Adrian put a slide up, and it was the market cap of the top five stocks in the S&P. And they were all, the big AI companies, Microsoft, Nvidia, whatever, right? And if I remember correctly, I think it was 15 trillion. And then he compared it to the top five precious metals mining company market cap, which I want to say was like 400 billion or something like
Yeah,
that.
it's
I mean,
yeah,
it was just teeny in comparison,
yeah.
right? And then he said, well, you know what? Let's just add the entire mining sector market cap, and that bumped it up to 700 billion or 800.
Right.
It still was tiny compared to those other five. So I guess where I'm going with this is if capital does wander over from the stock market, maybe these Mag 7 companies, or from the bond market, right? Because, bond
Yeah.
yields are still high and there's a lot of people who are skittish about bonds. I mean, even if just a percent were to move over from each of those markets into precious metals, it would be kind of bonkers what the price action would be, correct?
Yeah. Yeah, that's why I believe, and I don't like making outlandish claims, but I really believe in my heart and my conviction that gold mining stocks are going to scream, even though some have doubled and tripled so far year to date. I like Adrian's mention, but I'll do you one better, Adam. Okay, so the amount of cash that Berkshire Hathaway has is just about 350 billion, just their cash. If you added up the market cap, not the cash, but the market cap of the top 8 gold producers in the world, it's less than that. It's less than half that.
Less than half that.
So that's just one company and their cash. It's not even apples to apples. It's not a fair comparison. I'm comparing cash to market cap, but their cash is more than twice as much as the market cap of the top eight producers of gold. In other words, Berkshire Hathaway could buy every single share of every producer of those eight and still have half their cash left over.
Over.
So now they're not going to do that. I'm simply making the point, like Adrian was, that there's an enormous amount of cash on the sidelines that could come into this market, especially when their market weakens. That's going to be the key, in my opinion. We've done really well year to date with many of our positions, but that's really because it's people in our industry buying. It's institutions and fund managers in the industry buying. It's, for the most part, not the Wall Street types. It's not Main Street yet. So all that's ahead, and they have an awful lot of buying power, and that's going to increase the demand and hence the stock price of many of these companies.
Okay. Well, look, when we talk about these companies, I want to get a sense for where you see the opportunity lying, Jeff. So is it in uh, is it in where these companies are located? Is it geography based? Like I really like
It's
mining companies in South America. Is it the phase they're in that matters more at this point,
yeah.
whether they're explorer or a developer or producer? Is it the type of business model? Like are they pulling ore out of the ground, or are they a streamer or a royalty company? So
Yeah.
where do you see the bigger opportunity right now? What are you most excited about?
We do have some bifurcation. So anybody watching is going to say, well, hey, you're talking about doubles and triples. I've got two, three, four, five stocks that have gone nowhere, maybe even down on the year. We do have some bifurcation. What is getting rewarded right now is, as always, discovery. If you make a discovery, you're going to get rewarded even in a bear market. That's still being rewarded. But right now, what's really getting rewarded over other things is companies that are going into production. So it's the pre-producers, it's the new producers, it's the one adding, a new mine online. It has to do with production.
Okay.
And
Meaning that the gold has been found, but the mine isn't actually like up and running and spitting out uh, ore to be refined at
it's
scale yet.
that and new production. So it's from the construction decision. Once they declare that, that's a major, turning point for a company, if you will. They're going to build this mine and they're going to produce gold,
Yeah.
or silver or whatever. Once that announcement is made, that's your key to start. You want to start investing. But it's from that point all the way through to production, to new production, to maybe adding a new mine, that group right in there, they are getting the most reward. And as proof of that, Adam, you know what? Our two biggest producers up year to date are in Mexico. Mexico, where there's been all these scares about politics and them not giving permits and all that.
Hmm.
But it's because they were entering production that they all of a sudden saw their stock prices ignite.
All
And
right. So even with the regulatory risk, they were given enough credit for getting into production that was enough to be a really substantial bump.
that was what investors liked, and that's what they bought.
Okay. All right. Well, look, near the end of this discussion, Jeff, I will ask you if you're willing, sorry to put the pressure on you, to share a company or two that is currently on your watch list. And then, a reminder for folks, what Jeff does for a living is publish his newsletters, which track, all the companies that he likes in the space and tells you why he likes them and what entry price points he likes and all that stuff. And that's all that good stuff is behind the paywall in general, but maybe he might share a nugget or two with us, and that's an intentional
Yeah,
pun.
no pun.
Um,
Yeah.
yeah, and how about the business type? When I talked about miners versus the companies that fund them and then get a royalty or streaming claim.
So the royalty companies have been, and the streamers have been notoriously overvalued for years, even up until recently when we were in kind of a dull period, a bear market, if you will, in mining stocks. They were still overvalued relative to other mining stocks. But recently that has changed. They're not quite as overvalued as they used to be. And I think that's because you're seeing other stocks, particularly juniors, just jump. And so investors are chasing those. And maybe that's why the royalty companies aren't quite as overvalued as they traditionally have been. But there's still good nuggets out there. There's still good buys. They're relatively safe. They just may not be a 10 bagger for you. They may be a two bagger or a three bagger, something like that. Um, so you got to like royalty companies. The business model is fantastic. But if I'm going to try to speculate on grabbing the biggest gains that I can, it's probably not going to be with a royalty company. There are exceptions for sure to that. But in general, I'm probably going to go more toward the junior and developer side of things.
Okay. And just for folks that may not know exactly what we mean when we talk about royalty companies, these are companies that provide financing, usually early on, to a mining company. And their repayment is basically they get a claim of the output, the future output of that mine. And why that's so interesting, and Jeff, correct anything I'm saying that might not be exact here, but what's makes that such an appealing business model is these royalty companies don't have any operating costs.
Mhm.
Essentially, as the price of gold goes up by an ounce, that's pretty much 100% profit for the royalty company, right? And oftentimes too, they'll fund a bunch of mines, and it may take those mines over the course of years to come online, and so they can kind of grow their market cap or their profits one of two ways. One is the price of the ore goes up and they make more money off of that. Or they have a mine that they funded that wasn't in production now come into production.
Exactly right. What we look for with royalty companies is not just any royalty company. You can buy the big three or four if you want, but if you do that, you're essentially buying the ETF, the royalty ETF. So,
Hmm.
what I look for and I talk about this in the book, but you want to look for a royalty company that's going to have a big jump in cash flow coming in very soon, either now or over the next year or two. That's what you really want to look for because that's what's going to make a material difference to that company's bottom line. And yes, the gold prices help, so that cash flow is even bigger now than it would have been a year ago.
Right.
Um, but that's what they do. They have a 1% NSR net smelter return, or 2% or 3%. And so when they go into production, those royalty checks start coming. And with the price of gold, those royalty checks are inching up aggressively, actually. So that's what you want to look for, though, with a royalty company.
Okay. So basically, you want to look at their pipeline, is what you're saying, of what they've got coming on when in the future and how likely it is to actually happen by the time they expect
Yeah,
it.
and you want to buy the stock right before that big cash flow is going to kick in.
Got it. Okay. So beyond the royalty model, like what do you look for typically in a mining company? So when you say, okay, I'm gonna direct my attention to this company today, what are the key things on your punch list that you like to see as an investor?
Well, I wrote a book to answer that question, but
Okay, great.
because
Which is
I
Paydirt, right?
really, I'm not trying to promote it or push it. I'm just saying I got that question a lot. Like, why did you pick this stock or that stock or not this one? So that's what led to me writing the book during COVID. But you really want to start with the three legs of the stool: the people, the project, and the politics. You want people that are not just experienced but have successfully done what you're investing in or considering investing in now. You want to be in a pro mining jurisdiction. Yes, you will occasionally miss some big gainers in riskier jurisdictions, but I've lost money doing that. I don't feel the need to do that. There's hundreds and hundreds of companies in a pro mining jurisdictions you can consider. So you got to look at that. I give a good example in the book of how that played out for me when we looked at the politics of probably the discovery of the decade and did not invest in it. And then you want, a project that is like my grandma's chocolate chip cookies, big and rich, right? So that's what Rick Rule always talks about, and many others. You want to look for big and rich. So what you really want to make sure you're looking at is economics. Every press release that comes out, you want to ask yourself, okay, does this get the company closer to building and producing gold, building a gold mine and producing gold? Every single press release, you want to look at that and try to answer that question. Your answer will be subjective. I understand that, but that's what you want to have in the front of your mind. Every press release that you read is, okay, is this thing going to be economic someday? You may run into a low grade mine. I have a couple in my portfolio, but they've demonstrated that they can be economic. And because it's so big, it's just it's very attractive. Some senior's going to want to come along and want to buy that thing. So that's the main thing is it going to be economic? You want to have that in the front of your mind every time. But I think if you start just with those three things, you'll be 50% ahead of the curve, you know, from other investors who are just investing in anything that appears to be the hot stock of the day.
All right. And for somebody that doesn't have a lot of experience judging on each of those three things yet, because they might be new to this space, obviously it wouldn't hurt them at all to read your book, and then obviously subscribe to your newsletter to kind of, get the day-to-day insights from you. But I'll give you a chance near the end here to tell people how to do both those things. You mentioned, a senior might come and pick up that company that's about to do something really interesting. So M&A is a part of the bull market cycle here, and it's something we haven't seen much of in the precious metal space for a long time. We now have seen a couple of relatively recent acquisitions. I think Sandstorm was one of them.
Yeah.
Um, so talk to me about M&A here. When do you really expect that to get going? Are we at the starting line of that? Is that something that you think is going to come later on in year two of the next 2 years? Like, when do you normally see the M&A really pick up?
Well, let's put it this way. The table is set. The conditions are such that we are ripe for a huge cycle in M&A. I think it does happen. We got a hint from these financing, just how much money is being poured into them. So there's money there available to do it. But we have two things in place. One, I mentioned earlier, the cash flow and the earnings of the top producers, of the seniors, has grown by double and triple digit percentages year over year. That's hard to ignore. They're sitting on a lot of cash. They're printing cash basically at these levels, right? A lot of us wondered, well, why aren't these seniors buying these tiny little cheap juniors that are dramatically undervalued? They could get 10 of them for what they could have gotten one for 5 years ago. Why aren't they doing that? Well, one reason may be that they wanted to have greater cash flow and they wanted to see a sustainably higher gold price. We have those two things in place right now. There's another issue. If you remember back in 2011, one of the big complaints of the big producers was the debt they were carrying, and they were heavily in debt. It just, as the bull market went on, they went more and more in debt. Well, now the net debt over EBITDA for the producers, all the producers in the gold mining industry, is projected this year to be zero.
Wow.
So you
Wow. I knew
have,
they had cleaned up their balance sheet, but I had no
they've
clue it was
cleaned
by
up
that
their
amount.
balance sheets, right? So, and next year it's projected to be earnings are greater than any debt they have. So the net debt is extremely low, if not negative. So you have big cash flow coming in with a sustainably higher gold price, and you have no debt. You have the perfect environment for the seniors to want to begin to buy assets. I think we're just at the beginning of that, and because of that, we're going to see a fairly large M&A cycle going forward.
Okay. All right. Well, look, since we don't have a ton of time left, I want to get to asking you to show a little bit of ankle for us, Jeff, if you don't mind. So, if you can, one or two companies that are on your radar, that you might want to give folks a little bit of a taste of. And then obviously, if they want to learn more, they can jump over your paywall and subscribe to your newsletter.
Well, let me give you two from each letter. One is the free letter. We have a free newsletter, thegoldadvisor.com. So you can get basically a paid mining stock picking newsletter for free. And the reason we do that is because they are sponsors. They support this site financially, but it makes it free for you. But we cover them. First of all, we only invite them if we would own them ourselves. They have to pass our criteria. So we do own all these stocks. Um, so in that free letter right now, and I just had an issue out today, and this is a good example, was Radisson Mining, Heliostar Metals, and Banyan Gold. Now, all of those have doubled or more year to date. But again, they're just getting started. In fact, Adam, I should point out when we were talking about this bull market starting, and I said it started back, leap year day last year. Well, the miners didn't move then. The miners have only recently begun to move. Year to
Hmm.
date would probably be a good rough estimation of when they started to really pick up and move. So it's very young. It's half a year old for the mining stocks in that bull market. So despite those three stocks really running a lot, I still think they have a long way to go. We outlined that in the free letter. Today's issue, this is July 28th. You can reference that. We'll probably have another issue tomorrow. But we cover about 20 stocks in there. And those are three that I really like. I think they have a long way to go. Now, if you want to go over to the paid letter, I want to tell you about a company. This is behind a paywall, meaning that it's a little bit more speculative. All the companies in there are a little bit more speculative. Some are doing well, some are so-so, and a few are doing very well. This
Hmm.
is one that has the potential to do very well. So there's there's a company in Australia called Southern Cross Resources. They made a big discovery, and their market cap now is over $1 billion. The discovery was based on what geologists are kind of calling this ladder concept, a geological ladder. So you can picture a ladder with the rungs on it, right? Well, when they were drilling, they found out that the rungs were very high grade gold, like over 200 grams per ton in these rungs. And
Wow.
between it was lower grade ore, but it was still economic. So you had this, really compelling discovery for this company. And they had two of those ladders like that on their property. There's a company right beside it that I just recommended, and it's at a good buy level still right now. It is not taken off. They have somewhere in the range of 20 of those ladders that they have identified that are geologically similar to the one at Southern Cross. So this company right beside Southern Cross is called Golden Cross Resources. You can read all about it behind our paywall, why we like it. They're just starting to drill. I think it's a 6,000-meter program, I believe. They just started drilling. But the reason the stock hasn't taken off yet is because they had a lot of warrants and options that came free trading. And so some investors are selling and taking profits there. So that's why the stock has been weak. But if they make a hit, anything similar to what Southern Cross next door has found, this one could really run. It's a speculation, but I like it, and it's a stock that I bought, and then just last week I bought another tranche to put me officially overweight on it. So that's a good example of a stock that we would recommend in Paydirt Prospector, and now you have it too.
All right. And I remember from, I mean, years ago, Jeff, you've always been very good about being very transparent about your own trades, about when you buy, when you sell.
Yes,
You can
absolutely.
you continue to do that for your followers too, correct?
Absolutely. We have a 2 day rule, and a 5 day rule. We don't buy 5 days in front of a new recommendation. I personally make it even longer than that. And if I do want to sell, we just did a big issue and paid our prospector midsummer update of the full portfolio just this past Thursday. You can read every company in the portfolio. But I put a sell on two of those that just are not working. And I can't sell until today. So we have the 2 day rule always in place.
Oh, that really does reflect your integrity there, Jeff. All right. Well, look, for folks that would like to sign up for your service, um, let's start there. So if they want to sign up for either the free Gold Advisor newsletter or get one of the paid newsletters that you run, because you run several different newsletters, correct?
Yeah, everything's under thegoldadvisor.com. You'll see all the newsletters, free and paid. Our books are there. Peter Kraut came over when I purchased Gwen Preston's business last year. Speaking of M&A, we've had a little M&A in the junior newsletter writing sector. But he came over. He focuses almost exclusively on silver. That's his expertise. So we have actually a bundle package. You can get my letter and his letter for a reduced price. But everything's there, and we own everything. If it's in the free letter or the paid letter, it's a stock we own. So it's an over-the-shoulder look at what we personally are buying and selling in some cases.
Okay, and very frequently on this channel mention that, Jeff, which is first off, the um, precious metals themselves are quite volatile. Precious metals mining companies are volatility on steroids. And if you are brand new to this space, uh, you got to understand just how wildly volatile and speculative it is. And so, highly recommend that if you're new in here, before you just start learning from the School of Hard Knocks, much better to look over a professional's shoulder for a while to really understand, basically get your sea legs in the industry and understand
Mhm.
how a seasoned investor, what they look at, how they trade, how they buy, they open their positions and then add into a company, how they decide to sell, all that type of stuff. So that's exactly what you're providing there. I also talk about the wisdom, especially if you're new to the space, determining how much of your capital you want to put at risk in the space and maybe have some hedges in place too. I'll talk about all that in just a second, but that's what, the advisor, the financial advisors I mentioned on this channel can kind of help you with. But anyways, Jeff, so you're a classic over-the-shoulder resource for someone getting new into this space, but also, if somebody's really excited about this space, you are better connected and have more years and decades of investing in their experience in this space than the vast majority of investors out there. So, you're also a great advanced guide for somebody who's already got some experience in the space.
Yeah, my dad was a gold prospector for those that don't know me, so I learned a lot from him. I worked for Doug Casey for many years. Lobo Tigre and I were the metals investor team there at Doug Casey. Worked for multiple bullion dealers and other newsletters. I wanted to focus, though, pretty much on gold stocks. And so that's when I started the goldadvisor.com, which was during COVID, I might add, but we're doing very well. I'd like to say it's because of me, but I think it's because the gold price is rising a lot. But that's my background. And someone, if you want to sign up for the free newsletter and just read it for a while, like Adam's suggesting it, because we do focus on education about that. We interpret what the news release says. We're not just regurgitating what they say. We tell you what it means, and then we always talk about the stock and we always disclose what we're doing about the stock. So that's a great entry way to kind of learn. You could also get the book. It's
I was going to
pretty,
say, as is reading Paydirt. Yeah.
yeah, it's not expensive, but you could read a free sample chapter on the website, the scariest mine I've ever been in, but fair warning if you're claustrophobic. But you could read that and see if you think it's something for you. So.
All right. And if they want to get the full book, obviously there's a link on the website. Is it also available through Amazon and just sort of where books are
Yep,
sold?
you can get a PDF right on the website, or you can order through Amazon as well as other places.
All right, fantastic. Well, Jeff, as somebody who has watched you in your transition there to becoming fully independent and running your own show, and then seeing how well you've thrived, and serendipitously at the same time the complex begin to wake back up. It's really been a pleasure to watch. Last point I want to make on just what I was saying earlier too about how volatile this sector is, when you're investing in this sector, it is very much almost kind of like the venture capital approach, which is
Yeah.
you're going to have, some companies that do okay. You're definitely going to have some dogs in there that just, wither and die on the vine, and you got to expect that. But hopefully, it's all going to be more than made up for by your handful of ones that go up by multiples, maybe even those 10 baggers that you were talking about.
That's right. Yeah, you have to have some diversification. You can't throw all your money into Golden Cross Resources, for example. You need to diversify a little bit. I usually recommend you want to have around 10, but that number is going to fluctuate. Don't just buy 10. Buy them as they become compelling investment opportunities. Sell when you get doubles or triples, or take profits, I should say. We haven't sold a lot, to be honest with you, just a couple dogs. We've mostly just taken profits, meaning we've scraped some of our winnings off the table. So we still have a position in that original company. And yet now we can go out and buy one, two, three other stocks. So
Right.
that's how I've built, some wealth in the industry, that specific strategy.
Well, that strategy is smart and echoed by a lot of the financial advisors that I have on this channel recently. But it's also that's what's fun about a bull market, right? Is as you
Yeah.
have profits, and then you can you know uh, do your rebalancing. You then come up with extra capital that you can then
Yeah.
deploy to increase your diversification. It's all great. All right. Well, look, in wrapping things up, folks, if you've enjoyed having Jeff on this program, would like him to come back soon. I'm sure folks do. Please let him know that by hitting the like button, then clicking on the subscribe button below. A reminder too that Jeff is he is a regular at the Thoughtful Money conferences that we do. He publishes a deep dive uh, presentation of his walkthrough of usually it's like the 10 stocks that most have his attention at that given time. And he'll be doing that again at our upcoming fall online conference. That's going to be on Saturday, October 18th. And then last, if you're thinking about getting into the space or you're in the space as a DIY investor, but you'd like some help from a professional financial advisor on answering some of those key questions of like, okay, so how much of my capital can I afford to put in this space? And really, how much should I not put more into this space given its level of volatility versus all my other financial assets and goals and stuff like that? And would it make sense, given some of my positions there, to have some sort of hedge just in case the precious metals market goes through some sort of correction? Then you can have those conversations with one of the financial advisors that you see on this channel with me week after week to schedule one of those consultations, which are totally free and there's no strings attached. There's no expectation, commitment to work with these firms or anything like that. It's just a free service they offer. Just fill out the very short form at thoughtfulmoney.com. Jeff, my friend, it's always such a pleasure to see you again. It's great to see the success you're having. It's a lot of fun to see you doing this in the midst of a bull market. And I'm
Yeah.
really excited that, while the easy gains may already have been made, the big ones still apparently lie ahead of us.
Yes, I think you and I are going to be smiling even bigger this time next year.
All right, I hope so. I'm going to hold you to that, my friend. But anyways, Jeff, always so fun. Thanks so much for coming on. Look forward to seeing you at the conference.
Great. Thanks for having me, Adam.
Always a pleasure, buddy. Everybody else, thanks so much for watching.